story of the morning right now. Crypto exchange FTX on the verge of collapse after Binance backed out of its plans to acquire Sam Bankman-Fried's struggling company. According to people familiar with the matter, Bankman-Fried told investors that FTX is facing a shortfall of up to $8 billion from withdrawal requests and needs emergency funding. Reports say the SEC is investigating FTX. And right now we want to bring in the chairman of the SEC, Gary Gensler. Good morning to you, Gary. Thank you for joining us.
Andrew.
Lots of questions this morning for you about what is happening. And so let's just start with what do you know and what are you investigating?
Andrew, as you can imagine, and your viewers know that I can't speak about any possible investigations, but let's step back and say what's happening here. And it's really as old as finance and as antiquity.
Finance.
When you mix together a bunch of customer money, non-disclosure, and leverage, borrowing against it, and inside, these companies trading, investors get hurt. And I think just looking at what we see in the press, if I can stay with that, just Andrew, this story has been going on for many months. You remember the collapse of Terra Luna and a bunch of crypto lending platforms. Well, it looks like in the last few days, this is all interconnected. This is a very interconnected world in crypto with a few concentrated players at the middle. And one of those concentrated players had the toxic combinations of lack of disclosure, customer money, a lot of leverage, meaning borrowing, and then trying to invest with that. And then
borrowing
when
against their own clients,
markets turned on them, it appears that a lot of customers lost money. And that's where our mission is about those customers.
Well, let's talk about that, Gary, because critics would say, look, you have been talking about the need for regulating and yet have not. There's been lots of focus. We had you on last time when you went after Kim Kardashian. But on a relative basis, going after Kim Kardashian compared to what is now a massive undoing of FTX
incredible
isn't enough. What do you say about that?
Worst probably downfall of the year.
I think that investors need better protection in this space. But I would say this.
Clearly.
This is a field that's significantly non-compliant, but it's got regulation, and those regulations are often very clear. And we have multiple paths. And one path is working with those crypto exchanges, crypto lending platforms, and to get them properly registered. And why that matters is that's so the public's protected. But we have another path, which is enforcement. We've brought, between my predecessor and the teams now at the SEC, at least 100 actions in this case. And we've been very clear in these various enforcement actions. And we had a big win even this week on a crypto token called Library, where a court clearly said, you've been on fair notice. And yes, this is a securities under the securities law.
But Gary, in fairness, there are millions, if not billions of dollars that are going to get tied up that potentially will get lost in this situation by investors, not just retail investors, but pensions that have given money to venture capitalists that have invested in these things. Shouldn't this be more regulated?
Yes, Andrew, and the laws are clear. And look, the runway is running out. I mean, the American public and investors around the globe are getting hurt by a field that says they put a lot of fancy talk around it, Andrew. And the technology is interesting. And I taught it at MIT, and I think that there is some innovations here, but we still need investor protection. And so what I would say is, come in and talk to us. You've heard that before. The runway is getting shorter, and the laws are clear, and it's pretty rich for me when I think about it. Look, there's also celebrities. You talked about celebrities. There's celebrity CEOs in this space as well, celebrity crypto entrepreneurs.
Tom Brady,
and so the public
Giselle, Stephen
can
Curry,
fall prey
Shaq,
to their
Kevin O'Leary, David Ortiz,
promotions, their marketing. and the like. And it's really important. Our third path is also investor education. Going on a show like this is also to say to the public, beware, this is highly speculative. It is regulated, but without prejudging any one circumstance, largely non-compliant.
Gary, you said people should come in, if you will. Sam Bankman-Fried, it appears from your calendar, on March 29th, 2022, at 4 p.m., came in and actually met with you, along with Brad Katsuyama of IEX, someone who has draped himself in the flag, if you will, of an honorable exchange. Do you feel like you were hoodwinked?
That's a great question.
I think we've been clear in these meetings, and you can look at my calendar's public, many meetings with folks in this industry. Very clear in these meetings, same message to the public, same message to them, that non-compliance is not going to work. The public's going to be hurt, but also we're going to continue on these dual paths.
Not answering the question. Were you hoodwinked?
Be the cop on the beat, going into court, putting the facts and the law in front of judges.
Gary, being the cop on the beat, I guess if we were looking at your MO to date, going after somebody like Kim Kardashian because it's a celebrity front, because maybe that sends a signal more broadly. You just mentioned that there are some celebrity CEOs here. Is it fair to think if you're going to continue in that vein,
come down on Brady,
targeting those celebrity CEOs again because it sends a broad message and maybe gets people in line a little more quickly?
Well, it's also, if I could, Becky, it's about the platforms or the intermediaries. This is not like the New York Stock Exchange or NASDAQ. These platforms, and there's just a handful of lending platforms and a handful of so-called exchanges, which commingle. It's also another toxic combination where they take people's money, they borrow against it. It's not much disclosure, and then they trade against their customers. So it's getting and focusing on those platforms. Building the evidence, building the facts often takes time. I'll just use one example, which was is public, so I can say this. But in Terra Luna, that legal entity, we served a subpoena in September of last year. We actually opened the investigation earlier. That's all public. That's why I can say it. And that was challenged in court, at the district court, at the appellate court, all the way to a cert petition at the Supreme Court. That took a year. So defendants also have appropriately an ability to go into court. I think the better path is come in, work with us, get registered. We can use some exemptive authority to mold some of these registrations, but we're going to continue on these three paths: investor education, trying to get the intermediaries registered properly to protect the public, and also being the cop on the beat.
Yeah, so that's the long answer for yes, you are going to be targeting them, I think. Let me ask you something else that just feels wrong to me. I don't know if it's illegal, but watching how this stuff plays out in the headlines, where you see this deal, we've got a deal, a letter of intent, maybe this deal is going to go through, we're looking at it, you see huge moves and all the underlying issues underneath it as a result. CZ with Binance saying this first, now you've got Justin Tron saying he's putting together a solution without any details on it. TRX momentarily surged 4,000% on FTX after that happened. There are all of these issues that are out there, and it moves things in huge ways, and there's real money that's at play here and real investors who are potentially getting defrauded on this stuff. Is it illegal when you look into this?
I couldn't agree with you more. There's 10,000 plus tokens, and there's as many as 1,000 coming on every month to quarter. And so many of them have very thin trading, and the purported values, and I say purported values, might be only on very few trades, and then others are sitting with large buckets of these tokens. And we, saw this happen with the Terra Luna tokens earlier this year, and there was a token in the middle of this as well. What was its value? Where there are only a few holders of it? What was making those values?
He's referring
Secondly,
to
you said
FTX's native token.
In our securities laws, if you come to a merger agreement, even a letter of intent, there has to be full and fair and truthful disclosure.
Let me ask you another question, Gary, which actually relates to Tether. and stablecoins. Tether's now under $1,
losing its peg. Crazy.
And your former
USDT.
Your predecessor, Jay Clayton, has called for regulation on stablecoins. I raised the question because here we are again. Don't we need to know whether a bank deposit is actually a bank deposit or whether it's a money market at this point?
Look, I've said this for some time. The so-called purported stable coins, if they're not that stable, or if they pay a yield, a reward, an interest directly or indirectly, those are indications that the public is anticipating profits and that these could be securities under the securities laws. But I think that the public has seen that these are very much like a money market funds. And as you say, they sometimes don't trade at par. And we don't have the proper disclosure, again, behind what stands behind those claims.
But Gary, what do you say to the critics who say this is happening on your watch? You are the cop on the beat. You've tried to claim jurisdiction for this arena, as there's been, as you know, a battle between the SEC and the CFTC over who's in charge.
For part of it, I think that, and I was honored to chair the Commodity Futures Trading Commission. I think very highly. There's part of this market, non-security crypto tokens. I think it's small in number of tokens. It might be significant in size of market cap. So I think there's work for both of us market regulators, as well as other regulators around anti-money laundering and sanctions. I mean, this field really needs to come into compliance. And in terms of our efforts of the SEC, I can't be prouder of the staff of the SEC, but we too have limited resources. We have a $100 trillion capital market to oversee. And that $100 trillion capital markets, the stock market, the bond markets, treasuries, and the like, that's an important responsibility. And we don't want to undermine that in this relatively new market.
But what's the public supposed to think when we have a company that was worth literally $32 billion with some of the biggest venture capital firms out there, by the way, supported by pension funds in large part, teachers, firemen, and the like, investing in a company that, by the way, didn't have a CFO?
Look, I think it's pretty clear, Andrew, and we're going to do what Congress and the American public expect. We're going to be clear in our voice about the risk, the speculative risk in what appears to be largely non-compliant actors. We're going to continue to be working with the industry to try to get them properly registered, but also that cop on the beat. These things take time, and you would want them to take time so that we build the facts out. But I would say the runway is getting shorter.
If you're a crypto investor today, how much confidence should you have in the system?
That's a good question.
I would say to the American public, be careful, beware. There's still a lot of non-compliance. And when you give somebody your token and they go down, you're going to just stand in line at a bankruptcy court, and they may be taking your token and doing all sorts of things without proper disclosure. Now, if it's one-to-one backed and there's really good disclosure and you're protected against fraud, manipulation, that's all we're saying. That's what the securities laws are. There is a path forward to these intermediaries.
But for Americans who have money on an exchange like a Coinbase, which is based in the U.S., publicly traded company, also under your jurisdiction, or a Binance, the two biggest ones at this point that are remaining, should they feel confident that they can get their money out of those firms?
I'm not going to speak to any one platform, but I would say that you have risk. The rules and the laws are clear, but do not assume that these firms are complying with the rules and the laws that the New York Stock Exchange or the biggest brokerage apps are complying with.
So a couple of things to touch on there. Obviously, right now, crypto is just going insane. Like, we're down to 16.5 overnight. It almost got below 16. ETH, 1,200. FTT now somehow back up. We're going to be talking about this Justin Sun thing and how he's trying to step in. Crazy things are happening right now. Binance has released its reserve wallet addresses and revealed a reserve of close to 69 billion in the form of Bitcoin, Ether, and other coins. So right here, this entire story is a story of inherently too much leverage, people being greedy, people taking advantage of their clients, of their investors. And you're going to see that perfectly with FTX and what just came out from Reuters. But this is how things should be done. 69 billion. The exchange said it will share its proof of funds in the coming weeks. So they're saying, hey, this is how everyone should be doing it. We have the money. 475,000 Bitcoin, 4.8 million Ether, 17.6 billion USDT, 601 million USDC, 21.7 billion of its own stable coin. Crazy, crazy stuff. But this is how it should be. This is them stepping up saying, no, like we're actually protected, unlike FTX, who a little bit was shrouding it in mystery. And then it turns out a lot of their assets were inherently FTT, which then brings us to this right here. This is a development overnight of how the Alameda FTX Sam Bankman-Fried situation got so bad. This May and June, Bankman-Fried's trading firm Alameda Research suffered a series of losses from deals, according to 3 people familiar with the operations. So this is all surrounded around Voyager, which remember Voyager went down because of Celsius, and 3AC going down with Terra Luna. These included a $500 million loan agreement with failed crypto lender Voyager Digital. Voyager filed the bankruptcy protection the following month, with FTX's US arm paying $1.4 billion for its assets in September auction. Reuters could not determine the full extent of losses Alameda suffered, but most likely pretty substantial. Seeking to prop up Alameda. It was so bad Alameda was going down, which held almost 15 billion assets, but remember just under 6 of it was FTT, its own token, its own fake funny money. Bankman-Fried transferred at least 4 billion in FTX funds secured by assets including FTT and shares in trading platform Robinhood. Alameda had disclosed 7.6% shares in Robinhood that May. So right here, that top sentence of the second paragraph, Bankman-Fried transferred at least 4 billion in FTX funds. So it appears as if he took clients' funds from FTX, transferred it over to Alameda to keep it going. And he's like, yeah, we're completely fine. And then he backed it with his own money that he made out of the Ether. That sounds crazy illegal. Crazy illegal. A portion of these FTX funds were customer deposits, 2 of the people said, though Reuters could not determine their value. Bankman-Fried did not tell other FTX executives about the move to prop up Alameda, adding he was afraid that it could leak. All of a sudden, if you're not telling your executives what's going on, that's not a good look. On November 2nd, however, a report by news outlet CoinDesk detailed a leaked balance sheet that allegedly showed that much of Alameda's $14.6 billion in assets were held in FTT. Alameda CEO Caroline Ellison tweeted that the balance sheet was merely for a subset of our corporate entities, with over $10 billion of assets not reflected. Ellison did not return requests for comment. So there's this like seemingly young girl who's like a whiz kid that was apparently very important in the world of Alameda. And she tweeted that out. We could go to her Twitter and everything, but she said we had a whole nother 10 billion. And as of now, that appears to be a complete and utter lie. That failed to douse growing speculation over what Alameda's financial health really was. So Alameda blew up at the same time as 3AC, but SBF bailed them out with customer funds secured by FTT and Hood equity. This is insane. It really is insane. This might be the dumbest question on earth, but where are the on-chain records of these transfers? There was the one corresponding to this one, which was a massive amount, 4 billion of FTT being transferred to FTX from Alameda. Heads up, rotating a few FTX wallets today, mostly non-circulating. We do this periodically. Might be a few more coming, won't have any effect. So he, once again, just kind of lied to the public saying, hey, yeah, it's normal. So once again, it's all tracked. Obviously, it's tracked. You can see it. That's what the beauty of a ledger, but it's just shrouded in lies. It's looking highly probable that Tabasco knew what was happening and got out with the money while he could. Yeah, if the timeline is accurate, he basically quit just after. So I guess he said, nah, fuck this, and left. Surprised he kept tweeting about buying boats and stuff, if true. So is Tabasco Brett, or is that the Alameda? Because there was 2 people who stepped down. The Alameda co-CEO, he stepped down in August, though. And this appears to have happened in September. And then Brett, who is the president of FTX, he stepped down in September. Does anyone know? Do any of you know, is the name Tabasco, is that for Brett Harrison or whatever the fuck his name was? from FTX. A lot of the community did. Factual DD and Binance probably saw immediately and hit the brakes on the deal. Well, that's pretty much as soon as the balance sheet of Alameda was released in early November, like basically on Sunday, I believe, that's when it all came undone. The fact that when people realized a majority of the assets or a high percentage of the assets were being backed by their own token, backed by nothing, like their token was just their token. They just made it. Like it wasn't backed by USD or BTC or anything like that. It's just getting crazy.